Bloomberg's Betty Liu is in Houston today at the Energy Industry Board conference, and she joins us now along with Janet Clark, the Chief Financial Officer of Marathon Oil. Betty?
That's right. We are pretty much in the center of the oil industry here in Houston. And as you had mentioned, Janet Clark is with me. She's the CFO of Marathon Oil, which is the fourth largest integrated oil company. And Janet, great to have you with us. And I know that you've been attending the panels this morning at Rice University in the hall right behind us, talking about everything from, the future of the energy industry to, what are the best practices for the board. And you're on the audit committee panel. What are you getting what are you getting in terms of the sense right now as to what's on the minds of these energy executives, including yourself? I think
that all members of boards and audit committees, whether it's in the energy industry or otherwise, understand and respect the responsibility that they have to protect the shareholders and have to take a very active role. And I think the fact that we had so many people here at this Directors Educational Institute, as well as devoting a full hour to audit committee responsibilities, underscores the importance of the audit committee, and that with the rapid changes going on, whether you're talking about the financial, the economic environment that we have, regulatory changes in Washington, or even accounting standards, it's all getting much more complex. And so there's a lot of discussion on risk and how we handle that.
And is there a lot of talk about transparency? Because I've got to believe that that's top on the list, right? Transparency here.
Yeah, absolutely. Communication is key. I mean, the whole point of the financial reports that we put together are to help our investors understand how their company is performing and what they can expect from us in the future. And we have to do as good a job as possible of communicating our financial performance.
There's a lot on the agenda, including, for instance, climate change legislation, what is going on in D.C. and how that's going to affect energy policy. But that's going to affect a company like yours in terms of the visibility. How do you budget for climate change legislation? How do you budget for these, for these types of, and you smile because...
Because, Betty, that's a great question. It's very, very difficult because there's so much uncertainty. I think probably last summer with Waxman-Markey, it seemed that there was a lot of momentum behind cap and trade. I think that over the last 9 months or so, people have a better understanding of cap and trade and perhaps some of the imperfections of that approach. And I think perhaps the carbon tax is taking over primacy in terms of policy. And you talk about transparency. As an oil company, as all companies, if you're going to make investments, long-term investments, you really have to know what the rules are going to be on a go-forward basis. And we believe that a cost of carbon will be coming. We factor that into our thinking. And we have a preference for a carbon tax. It's much more transparent than a cap and trade, we believe.
Okay, so you oppose a cap and trade bill?
I do not think that the Waxman-Markey bill was well constructed.
Okay, all right, so carbon tax versus that then. What about the outlook for Marathon Oil then? You've cut back your capital spending, right?
Well, let me rephrase that. Okay. We had very, very substantial capital spend in both 2008 and 2009 as we expanded our Garyville refinery. It's South Louisiana. With that investment behind us, we'll have, last year we were about $6.2 billion CapEx, this year $5.1 billion is our budget. But what you'll see is a shift from investment in the downstream, that being the refining business, to investment in the upstream, which is the exploration and development of oil and gas reserves. So actually, our spending in oil and gas exploration and development is going up.
Okay, but the refining part is going down then.
Yeah, we are focusing on the upstream as our growth engine.
And what does that indicate then in terms of your outlook for oil prices then?
Well, trying to predict oil prices is rather tough. We saw it go from $147 a barrel to $34 a barrel in 6 months' time.
And yet we all try, right?
Yeah, absolutely. There's no lack of opinions. We try to base our business around some kind of mid-cycle price, which is somewhere, pick $65 to $80 is, our current view.
Which is about where we are right now. So funding, Janet, just before I let you go, funding, how is that like right now, tapping into the market?
Well, certainly in the fall of 2008, the financial institutions, financial markets essentially froze up. But what we found was by the spring of 2009, for large investment grade issuers, the credit markets were back. They're very strong now. The commercial paper market is available for A2P2 issuers. I think probably still seeing the banks a little bit slower to come back and not being as aggressive in their lending. But for a large corporation like ours, we don't have any problem with access to liquidity or capital. I think it's a different story for smaller businesses.
Okay, Janet, great to have you with us. Thank you so much for joining us. That was Janet Clark, the CFO of Marathon Oil. Mark, back to you.